Hello and welcome to the Convergent video series for the week of July 20th. Top three things we're going to cover on the video this week. First, the markets. The S&P was up just over 1% as we had varying news from rising COVID claims to corporate earnings. On the economic data front, unemployment, we had new claims over 1.3 million, continuing claims over 17 million, and total claims over 32 million. We'll touch on that in more detail. Also some additional economic data released last week between retail sales, industrial production. And corporate earnings, number three. A lot of big name releases last week, including the big banks and Netflix that we'll touch on later in the video. On some non-economic and market data front, first off, hope you all had a great weekend. The weather here in the Pacific Northwest was pretty picture perfect, although often here as it gets over 80 we start complaining about the weather, but overall it was a great weekend. Great time with family. I built a big deer fence on our property, getting our garden going. So just hope you had a good weekend as well and some good time with family and friends. On to the market for the week. As we mentioned, the S&P was up just over 1% on the week. Pretty roller coaster week as we had rising COVID claims. We had a record on Friday, over 77,000 COVID cases reported, which was a record. However, as we've been seeing lately, for the most part, the market has been ignoring the rising COVID cases as we've had kind of offsetting positive news on treatments and vaccines. So for the most part, the market's pretty much ignoring the rising cases at this point, although we are hearing some rumors of states potentially doing more measures to shut down, which could have an impact on that. Also, as I mentioned, big week on corporate earnings, which we'll touch on in more detail. The big stuff this coming week is going to be around whether Congress can pass the next stimulus package around the continuing unemployment claims or one-time checks, whatever that might be. And based on what I'm reading is that has to be done this week. Otherwise, there may be some delays in those checks going out in August, which would have a big impact on things like retail sales. So on to the economic data for the week last week, another busy week of unemployment releases. We had over 1.3 million new claims for unemployment, which makes the 17th week in a row of over 1 million claims, but that was the seasonally adjusted number. If we actually look at the unseasonally adjusted number, we actually saw a rise in claims up to 1.5 million new claims, and we also had another 900,000 of these pandemic insurance claims. So overall, we actually had 2.4 million new claims for unemployment last week alone. On the continuing claims front, we had a decent drop down to close to 17 million of continuing claims. However, that was the seasonally adjusted number as well. If we look at unseasonally adjusted, we actually saw a rise in continuing claims. So, what I'm seeing and reading on that is that it likely means that we were over-reporting claims for unemployment early in the pandemic, and we're now under-reporting claims right now based on the seasonal adjustment. And overall, we had total claims for unemployment still very, very high at 32 million. And that one comes with a 2-week delay versus the other numbers. And so based on new claims continuing to remain high and continuing claims remaining steady, we're likely to see that number not drop too much in the very near future. On to some other economic data. We saw, we keep hearing this term V-shaped recovery. We saw this huge severe drop in March and April due to the pandemic, and many people have been talking about we're going to likely see a very similar V-shaped recovery as things get back to normal. And in some areas we're seeing that, in some cases we're not. So first, on retail sales is something we're seeing very similar to a V-shaped recovery. When you look at the chart, extreme severe drop followed by a very extreme recovery. We're basically back to where we were before the pandemic. However, if we look at some other numbers, first industrial production, what we've seen is a small recovery since the pandemic. However, we're still down over 10% year over year on industrial production. And if we look at consumer sentiment, so how are people feeling about the economy right now? Again, we've seen a little bit of a bump off the bottom, but what it looks like to me is people are still very concerned about what might be coming in the future with the economy. So a lot more data to come on that, but again, still a lot of cautious news out there on the economy. Finally, on corporate earnings, we had some big name releases last week on the first real week of corporate earnings releases for quarter two. So we had the big banks, the big names like JP Morgan's, Wells Fargo, Bank of America, and overall they reported pretty good numbers, but they were very cautious on the upcoming quarters and around the economy in general. And really the only reason their numbers looked really good were they had record trading revenues coming in from all of the stimulus packages by the Fed being run through those banks. So that's things that aren't going to be sustainable necessarily or repeatable. And so we're cautious again on where those numbers for the banks are going to be going. And finally, Twitter reported on Thursday, so the big tech name, the first big tech name reported for the quarter, and they had again good numbers for the quarter. However, they were very cautious on their guidance going forward, actually reducing their guidance on how many new subscribers they expected going forward. So again, very roller coaster week that led to, and we have a big amount of new releases coming out this week. Microsoft is a big one later this week that we'll have to see again with all the tech names. Is with all the rise in the tech stock prices over the last couple months, are we kind of seeing some exhaustion on that or not? So we'll have to wait and see on that. So again, bottom line for the week, a lot of data all over the place, cautious news coming from guidance going forward, concerns whether Congress is going to get this pandemic package passed for the next stimulus bill. As we mentioned last week, rising issues with solvency. So a lot of news all over the board. And so in our position right now, we're still remaining pretty patient on how we're going to approach this. It doesn't mean the market can't keep going up. Every day that we get a positive story on vaccines, the market goes up. And also, if we do get this next stimulus package passed this week, and it's similar to, or at least people feel that it's going to be enough to keep things going in the coming weeks, we could see the market continue to go up. But overall, again, our stance is to remain patient. So we have a lot more information on all this in our blog post for the week on the market, so please check that out if you want to dive into some articles that we're reading around all this as well. But with that, as always, if you have any questions on your individual situation, please feel free to reach out at any time. And we hope you have a great week, and we look forward to talking to you soon.